Testing, testing, 1, 2, 3. Testing, testing, 1, 2, 3. Testing.
standing out there, and I was Well, I think we're 1 minute early, but we'll go ahead and get started. So with that, I will call the March 13, 2025 Revenue Estimating Conference to order. First order of business, without objection, approve the agenda. Hearing no objection, it's approved. And without objection, I'll approve the minutes from the December 24 meeting. Hearing no objection, those are approved. And I will begin by going to Jennifer Acton, Director of Fiscal Services Division.
Thank you. Up to this point, the national economy has been performing stronger than expected, and Iowa's economy has proven resilient despite consumers growing weary of high inflation and high interest rates. Although the current economy is relatively steady, it is showing signs of slowing. In addition, there's a lot of economic uncertainty and fluidity in both the national and local economies. Consumer spending accounts for approximately 2/3 of U.S. economic activity. The U.S. consumer confidence fell in February, which was the largest monthly decline since August 2021. This decrease comes amid economic uncertainty in both the markets and with consumers due to persistent inflationary pressures, widespread policy changes, and concerns over potential tariffs that may result in trade wars, which could further strain household budgets with overall higher prices for goods and services. In February 2025, the Consumer Price Index was 2.8%, compared to 2.4% in September 2024. And in January 2025, also experienced the biggest decline in retail sales since March 2023. The labor market is showing signs of cooling. However, the February jobs report was better than expected, which is reflective of a relatively healthy labor market, albeit one showing slower growth. As of February 2025, the national unemployment rate is 4.1%, up slightly from January, and Iowa's unemployment rate is currently 3.2%. Iowa's labor force participation rate is at 66.4%, which has been holding relatively steady over the past few months. This is compared to the U.S. labor force participation rate of 62.6%. Drought conditions in Iowa have improved compared to recent years. However, the agriculture and manufacturing sectors in Iowa continue to face headwinds and show signs of weakening. Farmers are already facing higher input costs, as well as concerns over potential disruptions to international trade and to the supply chain for commodities. Despite the uncertainty, current underlying economic conditions remain solid, leaving the economy in a relatively good place at present as we wait to see what happens next. U.S. GDP grew 2.8% in 2024, and at an annual rate of 2.3% in the last 3 months of the year. In addition, the core personal consumption expenditures price index rose 0.3% for the month to 2.6% in January, compared to 2.9% in December. Gas prices remain relatively low at $2.97 per gallon, which is with a greater chance of continued lower prices over the next year as supply outpaces demand worldwide. Compared to where we were in December, there are a lot more variables at play, which results in more uncertainty. This can lead to more volatility in both the national and Iowa economies and creates challenges for revenue forecasting. Things to watch: the effect of tariffs on agriculture and manufacturing, corn and soybean prices, fluctuations in interest rates, and the effects of stock market volatility on consumers. With all that being said, Iowa continues to be in a solid financial position with full budget reserve funds. The accumulation of general fund revenue continues to slow as expected, with the tax reductions taking full effect in FY 2026. The LSA estimates include these changes and others. The result is a slight decrease for FY 25 to reflect the expected decrease due to pass-through entity tax claims and revenue, a modest decrease for FY 2026 as the full effect of the tax rate reductions are realized. And at this point, trying to estimate FY 2027 net revenues is challenging. However, the LSA is estimating an increase due to estimated economic growth. Thank you.
Thank you, Mr. Plugge.
Well, thank you. As always, Jennifer does a great summary, so I don't have a lot of comments. I would just say on a general basis, people that I've talked to have kind of moved from a cautiously optimistic mindset to a little bit more of just a cautious mindset of because all the balls in the air and all the noise nationally. And most of the comments that I have are basically based on national information more than state. The state seems to be moving along as we thought it would, and the tax cuts are doing what we expected them to do. On the ag front, I would say that when I talk to bankers around the state, the farm renewals are going maybe a little better than they expected. Some bumps, obviously, and there's always exceptions to that, even in good times. But farmers are finding their way through this renewal season into next. The next season is going to be the more challenging one because of commodity prices and just the results of the last 2 years. And the tariffs are the biggest question and the biggest thing that you hear about as to what that impact may be on commodity prices going forward. And as we've seen, and as Jennifer referred to, the manufacturing ag business has obviously been impacted right along with it. On the interest rate, a little bit more commentary that rate changes may not take place for a while because of the concerns for inflation. And so some of the early projections of 3 and 4 rate changes are kind of declining. The 10-year bond has dropped. That's the driver for mortgage rates, but probably not enough to have a big boost in mortgage activity at this point. So with that, that's my comments.
Thank you. Just a couple of quick thoughts. First of all, thank you to the governor for the opportunity to represent the executive branch on the Revenue Estimating Conference. And as always, I appreciate and extend a thank you to the committee members for their thoughtful participation and everyone who helps prepare us for these deliberations, including LSA, Department of Management, and the Department of Revenue. Today's work essentially does 3 things. First, it confirms the state has the necessary revenue to meet the FY25 appropriations made last legislative session. It narrows in on the spending thresholds for fiscal year 26 and sets an initial projection for fiscal year 27 revenue. Today's recommendations from the executive branch and the legislative branch are all within 2% of one another, and most notably, our projections for FY26 are less than 0.2% apart. There are no surprises today. Between the tax cuts enacted and the economic headwinds that have existed for well over a year now, revenues have tightened. However, the spending discipline by our elected leaders, that is the governor and the General Assembly, continue to put the state in a position where the needs of Iowans can be met and we can weather through this tighter time. The reserve funds are full at $961 million. Taxpayer Relief Fund has a balance of over $3.75 billion, and the carry forward from the previous fiscal year was $1.9 billion. Regarding fiscal year 25, that is the current fiscal year, the available revenue to spend is above the dollars appropriated, and there is no issue with meeting the needs of Iowans in fiscal year 25. Regarding the negative estimates for fiscal year 26, this was expected with the enactment of the tax cuts that were passed last session. With these projections that we both suggest today, the governor's proposed budget continues to meet all the statutory requirements and leaves money in the ending balance, as well as the reserve funds being fully funded. The tax cuts are having the intended effect. They're leaving more money in the pockets of Iowans and Iowa employers. Over the course of these 3 years projections, we continue to see the revenue base grow. For an extended period now, we have been facing economic headwinds. While inflation is slowing from its peak, it remains elevated. Mortgage rates have seen a slight decline in recent weeks, but interest rates are still at a level that is prohibitive to investors. Obviously, it will be helpful when these drop and when there is increased certainty coming out of Washington, D.C. That being said, overall, the economy is strong, and we remain cautiously optimistic, and Iowa continues to be in a very good financial position. So with that, we'll move to the next agenda item, and that is review fiscal year 2025 general fund estimates, accruals, refunds, school infrastructure transfer, and lottery and other transfers. And I'll go to Mr. Plague.
Yes, and let me add my thanks as well for all the work that is put into this by the 3 agencies. There's a lot of information that comes through, but as Craig said, the numbers are fairly consistent this year between all parties. So when I look at the FY25 numbers, my recommendation would be to approve the LSA estimates. And I make that motion.
All right, the motion is to approve the LSA estimates. Any discussion? Second?
I'll second.
All right, we have a motion to approve the LSA estimate for fiscal year 25. All those in favor say aye.
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 Those opposed, no. The ayes appear to have it. The ayes do have it, and that is adopted. Next agenda item is fiscal year 26 general fund estimates, accruals, refund, school infrastructure transfer, and lottery and other transfers. Mr. Blakey.
Yes, and again, the numbers are very close. In this particular case, again, for consistency, I will recommend that we approve the LSA estimates for FY26.
Discussion? Second?
A second.
All those in favor say aye.
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 Aye. Those opposed, no. The ayes appear to have it. The ayes do have it, and those are adopted. Next agenda item, estimate fiscal year 2027 general fund estimates, accruals, refunds, school infrastructure transfer, and lottery and other transfers. Mr. Blakey.
And again, I'm going to say for consistency, because the numbers are so close, that I would recommend the LSA estimates for 27 as well.
So discussion. This one I would just comment that it would make sense to me that we find some place in the middle between the two. We are relatively close.
And I'd be open to that suggestion.
I'd be open to that too.
What would the middle number be?
$8,962.4, positive 5.3% for FY27.
8962.4, 5.3%. Correct? Okay, all right.
And I am good with that suggestion and would make that motion to approve that at 5.3.
A second.
We have a motion, a second. Any discussion? Seeing none. All those in favor say aye.
Aye.
Aye. Those opposed, no. The ayes appear to have it. The ayes do have it, and that is adopted. Last agenda item, fiscal years 25 and 26, gambling revenues transferred to other funds and interest earned on reserve funds transferred to the Rebuild Iowa Infrastructure Fund. Mr. Blakey.
Yes, I'd make a motion. We stay with the dollars mentioned in the projections.
A second.
A motion, a second. Discussion. Seeing none. All those in favor say aye.
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 Those opposed, no. As appear to have it, the ayes do have it, and that is adopted. Is there any other business to come before the conference? Seeing none, we are adjourned. Thank you.